Today I'm going to show you how to prepare financial statements in the OHADA format. This format was gotten from DSF, Déclaration Statistique et Fiscale, from the Cameroon tax website, dgi.cm, Direction Générale des Impôts. I built this to facilitate those who are having problems with their accounts balancing, statement of financial position, income statement, and cash flow, such that once you copy your trial balance into this module and you assign the various accounts to various elements of the financial statement, income statement, and statement of financial position, then you're going to have your financial statement without any stress. I'm going to run you through this, and then I'm going to leave a link where you can download the sheet. And then if you have any issues, want a private session, then you can contact me. The business info is where you input the information relating to the business. I chose to use Excellence Maritime Limited as my company. It is just a made up name. The business initials will be XLTR. The business type maritime transport, basically something you can put as the cover of your financial statement. The currency is another important aspect. We are going to use XAF. Whatever you put here is going to appear at the top of your financial statements as its currency. And the year end is equally important because whatever you put here is going to appear on the heading of your financial statements as your year end. Whatever you put as the business name will equally appear as the heading of each of your financial statements. In the next workbook, I did a list of all income statement and balance sheet individual items. For example, you have intangible non-current assets. I took research, development, patents, goodwill, other intangibles from intangible non-current assets of the balance sheet. I took land, buildings, etc. from the tangible non-current assets of the balance sheet. So I picked out all the elements of the balance sheet. And if you go to the bottom, you're going to realize that there are elements of the income statement. BS is the balance sheet and IS is the income statement. You can choose where each of the elements of the trial balance is going to in the statement of financial position or the income statement. The next sheet is where you are going to paste your trial balance. This is where you're going to paste your trial balance. This sheet is going to be empty to your left where it's gray. Now at the left, I have what you call the financial statement allocation column, and then I have the accumulated depreciation column, such that once I have pasted my trial balance at this level, you just need to paste the opening and the movement. We have some formulae that compute the closing. And then we have the totals at the top and the differences. So if there is a difference here, for example, if I remove this 12 million, then there's a difference here. So take note of that. I'll just press Ctrl Z to go back. So if you have any differences here, then you know you have an issue with your trial balance. So if I want to allocate elements, every financial statement element goes here, and every accumulated depreciation element goes on this column. The notes automatically generate themselves because we have put in formulae there to, to build the notes. Now, if I go to my balance sheet is empty. I just scroll at the top so you see my balance sheet is empty. If I come to my balance sheet, if I come to my income statement has figures relating to the previous year because the previous year balances are not gotten from the trial balance. So you need to manually bring them to your financial statement. So I have manually brought my income statement previous year balances to the financial statement. Same with the statement of cash flow. Some elements of the statement of cash flow are relating to the income statement. And so, since the previous year income statement balances are not brought forward to the present trial balance, we need to manually input our previous year statement of cash flow. You consult the previous year financial statements and then you bring to this model. An alternative would be if you don't have the previous year financial statement and you have the previous year trial balance, then you can input the previous year trial balance in this module. It's going to generate you the previous year income statement. And then you now copy that previous year income statement, paste in the previous year column. And then now you paste the present year trial balance to now generate the present year record. I have pasted my previous year financial statement here. And how I got it, I simply pasted the previous year trial balance, allocated accounts, copied the information from left, pasted values to the right. And then I wiped my previous year trial balance, pasted my present year trial balance. And then I had my previous year financial statements to the right. That's the income statement and the statement of cash flow. And then I now have my present year income statement to the left. I would like to show you that the present year figures are technically empty for the cash flow statement, for the income statement, and for the balance sheet, for the statement of financial position. They are empty because at the level of the trial balance, we have not allocated the account. So if I allocate these two, if I click on the drop down here, I see all the account types from the beginning to the end. We did this drop down with the help of that list, PS and IS items. The drop down is picking from this list. So if I go down and search for capital, this is capital. I have allocated this to share capital. So if I go to my balance sheet, I'm going to see this under share capital because I know that account 1013, account 101 has to do with share capital. And so using my OHADA chart of accounts and reconciling with the elements of the statement of financial position, I would know that this 1013 share capital is a capital account. So I will keep allocating elements just like that until I am done allocating elements. Since accumulated depreciation has a separate column in the statement of financial position, I created a separate column for the allocation of accumulated depreciation elements. So when you get to account 28, accumulated depreciation or amortization, then you start allocating on this second column instead of the first column. Once you're done with accumulated depreciation 284 whatever, you go back to the first column and continue your allocation. I already did my allocations and I saved it in sheet 1. I'm just going to copy. Going to copy all of this, excuse me, and then I'm going to go to my TB and then I'm going to paste here. Once I've done that, you realize that the notes have generated themselves. The first element of the statement of financial position that carries a figure has the first note, and so on. The second element has the second note, the third element, etc. So that is how these formulae are designed to pick up the notes. And everything that sums up to make those elements. For example, you see equipment, furniture, and all the likes. So note 2, as you can see, is going to be made up of all these equipment, furniture, and biological asset elements. So note 2 is going to carry all the elements that you assigned to equipment, furniture, and biological assets, for example. So that's how the notes go. Note 7 is going to carry everything that concerns capital. Note 1 is going to carry everything that concerns patents, licenses, and software, etc., as you can see. Okay, so if I go to my balance sheet, you realize that the empty balance sheet is now full and it is balanced. These are computations of the balance sheet is balanced both for the present year and the previous year, as you can see. This is the computation of the difference between the present and previous year, showing that it's zero, it balances. We check the income statement. We have our income statement for this year, provided the statement of financial position is okay and the profit for the year, the net profit or loss is speaking from the income statement and it balances the statement of financial position, then I can be satisfied with my estimate of the income statement. And then lastly, the cash flow statement. Uh, if we go to the bottom, we see the net cash flow as at 31st of December, picking from the various elements. This is the DSF format of statement of cash flow. You can look it up in the DSF normal document in the dgi.com website .cm, excuse me. You type DSF normal DGI on Google, I'm sure you'll be directed to the Cameroon tax website. You have the cash and cash equivalents at the end of the year. I did a cell reference at the bottom here, and then this compares this cash to what our statement of cash flow has computed, and you realize that there's a difference of 0, showing that our cash flow statement is also in check. Great. We are almost done with our financial statements. We go down at the level of the notes. This is a pivot table. So you need to click anywhere on this pivot table after having allocated your financial statement element. You need to click anywhere on this pivot table and go to pivot table analyze and refresh. If you refresh, just in case there was any change, it is going to update. Whenever you make a change to your financial statement allocations at the level of your TB, you need to refresh this pivot table so that your notes are up to date. So that said, you have your financial statement clean and easy. All you need to do is at the level of the trial balance, set your various capital elements, and then at the level of your financial statement elements are generated. At the level of your income statement, most accountants they do an assessment of their company tax while they're preparing their financial statement. So your company tax, of course, is the maximum of 33% of your turnover of your profit, the maximum of 33% of your profit, or 2.2% of your turnover, either 2.2% or 5.5%, depending on whether you're a liberal profession or you are in a regime liberatoire or you are in depending on your regime, you can read on that in the General Tax Code. However, after having computed the profit before tax, then we do the comparison of the turnover and the uh, uh, the 2.2% or 5.5% of the turnover, depending on your tax regime, and 2.2 and 33% of your profit. And whichever is the higher is what goes as your company income tax for the year. Now, this company income tax for the year, if you pasted your trial balance before inputting this company income tax for the year, then you need to go back to your trial balance with this figure, 7,488,787. You need to go back to your trial balance with this figure, create an account 89, the very last account. If we go down to the bottom, excuse me, I scroll down. Account 891, income tax for the period, to create the expense, and then whichever account 44 you use to compute your tax liabilities, you need to create the payable there. In this case, I used my advanced income tax because my advanced income tax was higher than my company tax. So I put this 7488 as a payable in my advanced income tax. So that is the only adjustment you need to make extra, given that you have not already initially computed the difference, your tax liabilities for the year. Excuse me. If you have not computed the tax liabilities for the year, you need to make that computation and add it to your trial balance. And make sure your trial balance at the top. And then you are good to go. Next thing you do, you check your balance sheet, you check your income statement, you check your balance sheet if everything balances. Excuse me. You check your income statement if everything is okay. Check if your various expenses and your various incomes meet your expectations at the level of your trial balance before you even start feeling. Check if your income statement is okay. You check if the expenses were rightly appropriated. Let expenses not be found in different places. You check your statement of cash flow if it balances and if it makes sense to you, especially if the difference is zero at the bottom here. And then, most especially, you check your notes. The notes are going to tell you whether you properly allocated the various elements correctly. For example, in patents, license, and software in the statement of financial position, you have the software value. In equipment, furniture, and biological assets, you have these particular elements. So I am saying that these elements make sense to be under equipment, furniture, and biological assets. This makes sense to be under transport equipment. This makes sense to be under customers. So once you finish checking here, you are sure that you properly allocated your various elements correctly. And then you're sure that your financial statements are good to go. You can now print them and do whatever you want with them. I've come to the end of this lesson. And if it was helpful to you, please share it with somebody you think might need it. Subscribe for more information relating to Cameroon accounting. Have a nice day.